Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Consensus by CoinDesk from Austin, Texas. Joining me for this segment, we have Francois Botha. He is the founder and CEO of Simple. We're going to take a look at the crypto asset trends in the family office space. It's great to have you with us, Francois. Welcome to Trade Talks.
Thanks for having me.
And it's so interesting, I have to say, out of all my guests, you are the only one who's talking about family office and the trends that you're seeing in the digital asset space. Is there demand there?
We can definitely see there is demand, Jill. I think it's still in the institutional asset owner space, but the interest is kind of peaking right now. I guess over the last year it was been traditionally with the low returns on the market, so looking for new ways of return, and they definitely dipping their toes into the crypto space. So that would often be through infrastructure investments into the blockchain infrastructure rather than holding tokens necessarily, like directly, and through funds would be that vehicle to do that.
So it's more of a longer term position that they would be looking to take, investing in the underlying technology versus more speculative positions like a crypto coin.
Correct. I think that they're probably more comfortable with that because the fund investment structure is something that they've known for a while. It's not that new to them, whereas within like holding crypto tokens, for example, directly, could be new knowledge, new kind of ways of managing that, and they might just not have that capability in-house just yet.
What are the challenges associated with it?
Main challenges we see is still there's a lack of knowledge and understanding. So what is crypto, how to handle it as an asset class. Secondly, I would say there's security concerns, a lot of concerns around regulation, storing and managing of crypto. Those are kind of the top concerns within there. And of course, volatility is a big one as well.
When you talk about family office, are these ultra high net worth individuals for the most part that are investing in it? And if so, what percentage or how much are they willing to allocate to the asset class? Yeah,
good question, because family offices, traditionally the term has been very loosely used, so it's not a protected term, right? And that could mean ultra high net worth individuals or family office management looking into this asset class. Globally, there is about 1 to 2% allocations happening right now of portfolios. The US and Asia is leading a little bit on that, but Europe's following closely behind. So it's more kind of as a test and trial, I would say.
It's so interesting that you're saying that the US leads in the interest in investing. Meanwhile, we are not quite leading the way when it comes to adoption or innovating in some of these products. I mean, we know it's in Southeast Asia and Latin America, they're making a lot of strides when it comes to fintech, when it comes to crypto assets. But so it's interesting to hear that the US is leading when it comes to the investing side of it.
Well, I think crypto is one of those new asset classes. We've seen a couple of new asset classes coming online. So SPACs, a couple of years ago, saw similar types of allocations to SPACs. And crypto is just one of those other new asset classes coming online. So I would say it's pretty much in line with what we've seen historically with allocations, while investors are still trying to understand how to handle this, how to manage that. The top concerns around that would still be around the technology to manage and report needs to catch up on this as well. Do we treat this as a foreign exchange, more like a currency item, or a private equity type of investment? So that is not very clear.
And so it sounds like there's a lot of opportunity in this space. I mean, if only 1% is being allocated, and as the asset class continues to mature, you can only go up from there.
For sure. I think, again, coming back to technology opportunities, so a lot of tech players in family office space would be well positioned to help manage and onboard family offices into cryptocurrencies. So definitely the growth could come from that tech support within the kind of safe environment of, say, a portfolio management system or a planning and management of management system.
Are there any other interesting trends outside of digital assets that you can share with us in the family office space?
Yeah, for sure. Three kind of major movements right now would be, as we see new types of wealth owners coming online, there's an increasing demand for family office type services. So those wealth owners would be the next generation. Of course, there's a lot of talk about the great wealth transition, but there's also a lot of entrepreneurs exiting their operational businesses through liquidity events or partial liquidity events, for example, and they would look to family office structures to manage their wealth, often because they've raised through family offices if they wanted to raise investment into their own startups. So that is kind of the drive there. I think some of the other major shifts would be driven by societal changes and expectations and demands on wealth owners, this increasing demand for transparency. And again, family offices haven't traditionally been the most transparent vehicles out there. So how do they kind of play into this need for this increased demand for transparency? And then there's also on a personal level, there's a demand for more than just financial returns. So people want to know that their investments are making an impact and that impact is measurable. So there is kind of that shift on a more personal level as well, impacting how family offices operate and how they need to structure to support those wealth owners.
Interesting. All right, Francois, I appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. All right, we are all good. That was great.